After watching me invest for 15 years, my wife decided that this year...
Hey V,
Yeah.
I want to start investing.
And she added,
How hard can it be?
because...
I mean, you can do it what?
So, I got her account statement and I'm gonna share with you guys today. Hi guys, Stanley here. This year has been a wild ride for the stock market. Before this year, the stock market has been in one of its longest bull run. The S&P 500 has increased more than 360% since the global financial crisis back in 2008. And at the beginning of this year, we experienced the sharpest drop in the last decade. The stock market was down more than 40% when the lockdown started all around the world. However, as major governments around the world started huge stimulus plans to boost the economy, the global stock market started rallying again. And during this period, more and more people are stuck at home, and many has decided to enter the stock market to boost their income. Brokerages around the world have seen record increase in account opening during the past few months. And one of that new account was opened by my wife. After 15 years of letting me handle the investment for our household, she decided that it shouldn't be too hard, since I can do it. So she wanted to give it a try as well. And I'm sure my wife will make a great investor if she wants to be. After all, she is also financially trained, having gone through the Chartered Accountant program, and has worked in corporate Singapore for a decade before. Plus, she's definitely much smarter than me. So she's right, if I can do it, so can she. Investing is not that hard. And if you have gone through our free investment course before, you have enough skill to search, analyze, and invest in a stock. But I think most new investors underestimate just how the stock market can toy with our emotions. My wife started investing in March when the market is crashing. I'd like to share her journey with you, as I believe many of you, especially if you have started investing this year, would have a similar experience as well. For full disclosure, I decided not to help her in her investing journey, as it is important for her to experience the market through the ups and downs. But she did have access to my research through the premium VIA Club reports. So, following our research in VIA Club, she managed to find a few companies she liked and started building up her watch list stock. This is a good starting point because she is choosing among the companies that we have vetted, and she gets to see the feedback from hundreds of our members before making any decision. This prevents her from rushing into buying a stock without sufficient understanding. This is important, as when you rush into a stock just because it is a hot stock right now and you feel you need to take part in it, it can be a dangerous move. Because when the market falls, you wouldn't know what to do with it. And that will cause more unnecessary mistakes, such as maybe holding on to a stock that might have changed fundamentally. For my wife though, the first few months of investing were great for her. The market was rallying, she made a few investments which have done very well. And that got her very excited and fueled her enthusiasm to invest even more. But just after she invests most of her capital, the market turned, and her overall portfolio is slightly in the red right now. She is not panicking yet, as she knows that her investment is for the long term, but I can sense her excitement about investing has worn off. And that might be happening to you as well. You might even start to feel uneasy about investing when you're faced with a declining portfolio. That's perfectly okay. However, I hope this experience does not force you to quit investing altogether. This is because the market is always going up and down. This year alone, the market has swung more than 40% from top to bottom. And in a typical year, the market will swing around 15 to 25%. So the market will just keep on swinging in the short term. The key for us is not to get too depressed when the market is falling, but also not get too arrogant when the market is rising as well. Instead, we should focus on the business performance of your company and not the stock price performance. This means that instead of checking the stock price, we should be monitoring if the business is growing and if the business have enough cash to survive. Try not to jump to conclusion just because if the stock price is declining, that you have made a mistake. And similarly, when the stock prices are increasing, it might not mean that we are great investors. Remember, the stock market is a voting machine in the short term, but a weighing machine in the long term. So if we want to build long-term wealth, we should play the long game. And I can assure you, it is a far easier game than predicting short-term price movement, and far more rewarding as well. So if you want to revise some of the basics of investing, remember to check out our free investment course at valueinvestasia.com/free course. We will teach you how to find, research, and even value a company before you invest in them. Anyway, that's it from me. Till we meet again, invest safely.